Good morning, folks. My name's Robert Coulter. I'm the General Manager for Partnerships here at the AFA, and I'm delighted to be introducing you to today's webinar titled Using Xplan Efficiently for Paraplanners, brought to you in partnership with Iress. Today, you will hear from Andrew Austin. Andrew will explore Xplan and demonstrate the comprehensive financial planning and wealth management software to help with reducing administration, maximise business opportunities and deliver high impact financial advice. The session will provide insights into using Xplan Cash Flow, assets and liability modelling known as CALM, efficiently. It will include what's new functions, using key dates effectively, saving and locking scenarios, importing selected client data, and managing balance cap excesses, freeing you up to spend more time on what you enjoy most and do best. Andrew has spent the first 20 years of his career working with NAB, the last 7 of those in several management roles. During this time, he completed both his bachelor and master's degree. He then moved into financial planning, first joining Westpac as a business advisor for 3 years. During this time, he completed his Diploma of Financial Planning and became a CFP. He then continued on to his own business with AXA as a licensee for the first 12 months, and then he joined PIS for the next 3 years. In 2007, he joined Iress as a training executive for their wealth management programs, which included both VisiPlan and Xplan. Before we begin, I might just cover off some webinar housekeeping. Today's webinar will attract 1 CPD hour, and as usual, that will be sent out to you next week or post this. This webinar will be recorded, so you can go back to it, and it'll be hosted on the AFA website. Andrew is very happy to take questions, but those questions will be taken at the end. So if you can please use the Zoom Q&A feature, not the chat feature, as you can see in the diagram in the slide. Andrew, thank you for putting this together. We've had an incredible amount of interest. I think there's about a little over 250 people have registered for this. So you've hit a rich seam of interest. As I said, thank you for putting this together. We're all looking forward to hearing your comments, and you know what, learning a little bit more about how you use Xplan efficiently. Andrew, over to you.
Thank you very much for that, Robert, and thank you for the opportunity to present some efficiencies using CALM. So what we're looking at in this particular hour is, first of all, what's new in CALM. You'll find over time we do add content. A lot of it will be based around legislation. And then what we're going to look at is some very efficient use of CALM. Now, this usually brings along or comes from questions like, we don't know what we don't know. And that's understandable. So what we're trying to do here is identify particular areas that you may not be aware of, where you can use CALM much more efficiently. So even for those paraplanners who've been using it for a long time, I do hope that there is some content in here that you can find valuable. Then we're going to do a question and answer session, and that will be broken up into 2 parts. So one will be where we have got some questions already come in, or common questions that we do receive. And then what we're going to do is open it up to yourselves, where you may ask some questions during this session as well. And we'll be answering those at that time. So first thing I do want to cover off is the what's new. The latest one is with the property input. There are specific reasons why that has changed, and I'll identify that as we go through it. Also, you'll find over time, especially the last 2.5 years, there's been a lot of changes in aged care, and it's based on the legislation that's come through, and also touch on also the defined benefits. I'm not going to actually model the aged care or defined benefits, but later on I do want to show you where there are additional resources that you can access on how to use those particular areas. Then what I'm going to do is move on to the efficient use. Before we do that though, let's have a look at the what's new function within Xplan. So firstly, when you log in and then you go and identify your client, you've got your quick search. In this case, I've already got my client here, and you can see I've got a list of scenarios that have previously been created. Now I'm going to cover off some of this scenario management a little bit later, but what I want to identify is the property one at this point in time. So if I just clicked on the scenario that I've created for this particular area, and you'll find all the screens have changed. Where previously there was the property and rates and fees were separate screens, now it's all contained on the one screen. So in just accessing my menu, I go down to individual and to assets and to property. Now I'm going to create this one from scratch. One of the first things though, you'll find all property amounts entered are in present value. If you want to click on that link, you can change that to future value. With the add property, you'll now find this link is in several places throughout the Calm tool. So if I go to add property, and then we give it a name. Now, if the client's got a property portfolio, make sure you put in a description that will help you identify it, because descriptions is typically a field that comes through in the outputs in your advice documents. Straightforward information as in owner, it's existing, don't need to worry about that date unless you know what it is. Put in what a current value is. You can also put in the non-depreciable cost base if you know what that is at the time. And of course, that is the land value. Now, through this new property data entry, you've got these little tool tips. So if you click on these tool tips, we'll help you identify it. Now, this is to show you one of the main reasons why we've restructured all this property is to take into account the aged care assets test. And it includes main residents. And it allows you the ability to model aged care with their residents as well. And then now what we've got in the data entry, you'll find these various tabs. So if I go to the next one here is growth, rent and expenses. You can nominate when the period is, that you keep it as the home. At this point, we just leave it to the end, and you've got your growth, and you've also got your various income and expenses. If it was investment property. And down the bottom here, you've also got a summary of that type of information. So here's another example where you can also add another property via that link. And then we go to the dispose of the property. And this is where, again, you can nominate when you want to dispose of it. Now, when we go to these tabs, complete the data entry down the bottom, you just go done. But then there's also additional information. And you can see from the main property screen is where we've got income support exempt homes. So you've got your summary here. If I go to that, and this is where you can model income support exempt homes. And again, we've got these tool tips to help you identify on how to manage this. So do not make the aged care adjustments here as the 2-year exemption is applied automatically. Similarly, in the next one, if we go to the CGT exempt home, you've got your field to adjust. And again, you've got your tool to explain what this is for, and just click on that. And you can see here, you could assign a period of up to the 6 years from the date that it's rented before CGT is attracted. So that's just identifying the brand new, or in the last couple of months, that particular data entry process. Now, because it's brand new, you may find as legislation changes or there are variations, we will change that from time to time as well. The other ones I also wanted to cover off while we're here is the aged care. And you'll find the aged care is found under our cash flow and aged care fees. So to include aged care fees, we just simply change that to yes. And you find there's a couple of different levels of data here. So the first one is the date the first entered, it shows it's existing, and then we'll only bring through the appropriate fields as required, and you just change those as necessary. If you are modelling for a client, now aged care we understand is a very specialised field, and you want to suggest that this is now going to be a new strategy for them, then you can go and select an appropriate date, and that will change all the necessary fields where you can build all that information. Now, just to understand how Xplan or how Iress manages this particular Xplan tool is you'll find some of these fields will change over time, and a lot of it will be based on legislation. But the other side of it in understanding it is different licensees may interpret that legislation differently. So there may be a licensee who requests, well, we've got a lot of paraplanners or advisors would like to model this particular strategy in aged care. Can we look at accommodating that? And typically if we get those type of enhancement requests, we generally say yes, no, or maybe, depending on the nature of the actual request. So two main reasons why you'll find screens like this will change. And as you can understand, the last 2.5 years, there's been a lot of change here. Again, most of it based on legislation, but also based on requests that we get in strategy modelling. So that's the aged care. The other one I just wanted to highlight as well is the defined benefits. And to do that, if we go down to our super, and if we go to key info first. So first of all, you manage whether you want to include it. So you've got your untaxed funds or capital guaranteed, typically your government employees, and you've also got defined benefits funds. A lot of it will be government departments. For example, like the police, there's a lot of them still have defined benefits funds. So if you do want to include modelling that, then you simply change this here first to include, and you'll find it will then bring through that necessary screen where you can model that. So if I select my defined benefits, you can see here you've got your choices, whether they be your lump sum, pensions, and both. Your accrued benefits, specific amounts, should all be aware of these. Some of the new changes, and when we scroll down, so here you've got your member funded portions, what they salary sacrifice. You now also have the notional contribution, which is the new entrant rate. And scrolling down a little bit further, your discount rates, so that's always been there. But now there's also this in managing the rollover. So they may leave, for example, the police force, continue other employment, then you can nominate if you want to roll it over to accumulation and nominate the actual rollover date. Now, again, I haven't got time to actually go and model this because it would take a good hour to give it justice. But what I will highlight to you a little bit later, there is a resource available to you where we have a video recording on how to model this. That is in the Iress community. And I'll explain that one a little bit later. So that is effectively the three areas where there's been a lot of changes. As I said, they will also be ongoing, depending on legislation and requests. So the next thing I want to do then is move on onto some efficient use income. And I'm going to group the first two together. So managing the scenarios, saving them, locking them. And in particular, I'm going to highlight managing it for reviews. And at the same time, I'm going to cover off the importing selected data. Now, again, this is a subtle thing that you don't know what you don't know. Show you what most people import, but there is a way that you can specify exactly what data you want to bring in. So that's what I'm going to do for this one. So I'm just going to go back to my scenario index first. So this may have been a few months ago or even a few years ago where you have done various strategies and you've compared them and determined which is the most appropriate one for the client. What you should then do, and a strong recommendation, is you go and lock it. And the reason being is, let's say this was the recommended strategy for the client and they accepted that, and you want to review it in 12 months' time. If I go and click on that strategy and it's not locked, then the first thing it's going to do is open it and update with all the current legislation, which could be a change in tax rates, for example. And of course, all of your Centrelink benefits would have changed a couple of times in that 12 months. So the general idea is lock it down. Now, ways you can manage this then is even with a lock scenario, you can then go in and click on it and save as a copy and then refine it from there if you needed to. Now, another way of managing this, let's say it's a review time. So I'm just going to put in here, let's say review, and typically a date to help you identify. If you do use your various cases, then you can also attach this. I'm just going to leave it as that scenario name and create that scenario. So what I want to do now is I've got my previous scenarios, which was the client's position at that point in time with all of my strategies. So what I want to do now is build the client's current position now, which could be 12 months or 2 years down the track. So one of the first things is if you go to import data from Client Focus, so you don't have to go through every single screen and re-enter information. One thing I strongly recommend first is you go down to the very last input screen under options and you determine where you want the investments to import from. So you can see here, import location. Do you want the assets to come through from Client Focus or from IPS? So a lot of times you'll find licensees or Xplan sites will have set up data feeds. And then all the information sits in Client Focus is linked to that data feed account. And therefore will update the balances and values at that point in time. So we're going to pull it through from Client Focus. So if I now go to import, and you can see it will import all the data for client and partner. And those of you who do model your company's trusts and self-managed super funds, it does not import data from them. You'll need to add those in from scratch because there's a lot of linking associated with that, which is not in Client Focus. So if we click on it to proceed, and here you'll find these are all the areas within Xplan where you've got client data captured, and you can determine what you want to import or skip and the entity ownership. Now, a couple of key things with this screen, you can see the assets are coming from Client Focus. If I had left it as IPS or the portfolio module, it will say that, assets IPS. Now, that's all most people do. They basically say, yes, all of those things, bring it all through. Now, there may be specific data that you don't want to come through for whatever reason that might be. And it might be some income or it might be some financial assets. Now, to do that, where have we got review data? If you change that to always, what now happens, rather than just go next and it imports that, it actually skips through all of these different areas in Client Focus, lists all the individual items, and you can pick and choose what you want to actually import. So if I go review data always, then I go next. So this was for information is not in that screen. Then we'll come through. Then we've got her wages, his wages. Then we go next. And you can see it's identifying and picking up all the different areas. So that's income and expenses. Here we've got our assets. So these are our financial assets. You might say, no, I don't want to bring those through because the client doesn't want me to show any modeling on that for whatever reason. And again, you just continue on all of those different areas and determine exactly what data you do want to input. When you get towards the end, it will then say, ready to proceed. Yes, just confirm, proceed. And you can see that will now import the data, confirm, okay. And as you go through the various screens, you then can go and check that the data has been updated. Now, a lot of that will depend on whether you've done reverse fact finds and updated, for example, reduced home loan balances, increased super balances, or if you're getting data feeds, but that will bring through everything that sits there at the moment in Client Focus. What you may want to then do as the review, if you go to something like display for the individual and come, and what I can do is I can now compare their current situation with the previously saved scenarios. And in managing the scenarios, you've got this drop down on the title here. So if I click on that drop down, I could go and save as if I want to do additional strategies. So what would it look like if we increased super contributions? Well, what allows you to do it here is I can switch between any previous scenario and check it if I wanted to. But here you also have the ability to go and compare it. So I'm going to compare their review situation with a previous scenario. And the one I'm going to look at is the one that was locked. I'm going to say the growth portfolio with the regular savings plan is what we recommended 2 years ago, let's say, and the client accepted it. So when I click on compare to, now this can only be done in display. What it does, it actually compares those cash flows side by side. So we can then scroll down. And you can also scroll across, and you might want to see what their total wealth would be. And this is a quick look at to see if they are on track. So very helpful way on managing your scenarios. And again, if you wanted to then save as from this one, it might be review update or revised super contributions, something like that. Again, once you have finished with it and the client has accepted that, in your scenario index, again, we recommend that you go and lock that down. Click on to lock, and that will explain it will be frozen for future reference. So it's consolidating the information that sits in there at the moment, because that is the basis for your advice at the moment, based on current legislation and tax rates. And lock scenario. Typically, you'll then find that the only person that can unlock it will be the person that's actually locked it. And you can identify that in the scenario names over here. So hopefully you'll find that helpful on managing the scenarios. So save them, save as many as you like with different variations of strategies, lock them down to lock in the current legislation, being the basis advice. It can be very helpful in managing the reviews. Also, using the import, you have the ability to select specific data that you may want to use. The next one I do want to cover off is the key dates. And there is actually a question that comes around this, so I will expand a little bit later on this as well. But I just want to identify the key dates and how they can be used. So I'm going to use a different scenario here. And one is I'm going to look at the client saying that they want to purchase an investment property. So if I go and do some modeling and see how that strategy would look. Now, typically, when you use your modeling, you will have your projection start date is 1 July. So if you want to move cash in and out of facilities, typically it will be starter period, 1 July, or end of period, 30 June. Two main reasons why you may want to use specific future key dates. One common one is if you want to model a strategy within the next 12 months. So you're not going to wait till the 30th of June, 2021. You want to do it at a different time. The other common one will be targeting when a client turns maybe 67, when they can access the age pension. So they don't worry about the financial years, 1 July, 30 June. They want to target on their birth date when they hit 67. So they are two common ones: strategies in the current 12-month period or retirement dates. So here I've identified one where I've got one key date, and I'm going to say this strategy is for the client purchasing an investment property. And this is the date that they're looking. So they know around December, there's a lot of people start moving around and they're going to try and pick up an investment property at that point, and then of course go and rent it out. So now that I've identified that key date, that now allows me to choose that date for my various strategies. So what I'm going to do now is go and show you how to use that. So if I go down to my individual and I go to assets and I go to property again. So I showed you here where we added in their existing. So what I want to do is add a new property. And let's say it's at Noosa and it's a unit. We'll put it as joint. And then when I click on the drop down here, now that I've added a key date, I can select that date at any time to move cash in and out. So typically for a property, I can purchase the property on that date. We'll take the funds out of cash flow. And then I can also draw down debt on that date to fund that purchase. So I select that date as the purchase date. And then, as I showed you before, you simply go and populate the remaining information. So you put in what a purchase price is, what the applicable stamp duty, legal costs, or any other expenses. And that will then give you a summary of the total acquisition costs. Again, non-depreciable cost base will be if there is any land value. And then moving through this one, you will need for investment properties. If you go growth, rent and expenses, you can see here that the rent comes through by default as starting from that date. Now there's a question that comes through on how to manage that, and I will show you that a little bit later as well. But here you simply put in the growth rate of the property. What is the rental income amount that you want to add? So you can put in a yield based on the value of the property, or you can put in an income amount. Now I'm going to explain on how to manage those when I do that a little bit later. You can also nominate any indexation of rental increases. We'll leave it as a default CPI. And if there are any expenses, so typically things like rates, if you want to put a depreciation amount in, for example, if it was a brand new townhouse complex that was built, depreciation rates, typically about 2.5% on the structures, depreciating over 40 years. And again, you can index any of that and summarize it. That's all I'm going to put in this time, because what I'm going to say here, and this will answer one of the frequent questions, is what if they buy it in January, but they don't rent it out for 2 months? So identifying you can't add the rent here. And click done. Okay, so that's where you can use your key dates on managing purchases, or anytime you want to do a strategy, buying assets, drawing down debt, whatever it might be. Let's continue on. So we've now covered the key dates. Another one I do want to cover is the balance cap excess. It's a fairly easy one, but like a lot of things in Xplan, and in particular CALM, as long as you know where to go to actually do it, the actual mechanics of adding it is fairly straightforward. But I just want to identify for this particular one. So what I'm going to do is I'm going to flick over to a different strategy on where I have this. I'll just wait and let it load. So I've already got some pre-built pensions for our client. And of course, any new facilities have to be added in input. But if I then go down to our pensions and account, now for those of you who've been using this for a time, CALM for quite a while, summary is the old way of managing the pensions. Account is the new way. My suggestion, just use account. It's much easier because all the information is on the one screen. So if we go and have a look at Nick's ABP as an example. So one of the things you'll find here is where you can add any existing or any rollovers. So with this particular rollover, when I identify a date that the client actually wants to retire, it will show me what the indexed balance cap is. And it will then go, hang on, what have I got? Just bear with me. Okay, now if I go and have a look at my pensions, that's not flowing through correctly. I might have chosen my wrong scenario. My apologies for that. If I go and switch back to, and I just go and update this. So what you find is when you go and create the brand new pension, you can go and add all the associated details. And what you'll find is it will show the balance cap, but when it transfers it, and I'm just going to increase this slightly so the amount flows through. So what I'm going to do now is do the rollover from scratch. So I've been playing in the other one, so something's happened to it. And that's why it's a good idea, keep saving as, in case something goes wrong with one or you miss what's happened, then you've got a basis to go back to. So if I go and roll over account-based pension, and I give it a description, I'm just going to go something simple like Nick ABP. And account-based pension, I go and select his retirement date. That will give me the indexed transfer balance cap at that point in time. And it will show me his balance here. I'm still getting that error for some reason. So the general idea is you then go and do a full rollover. Now let's say his balance at that point in time was, let's say, about 3.8 million. When you see the rollover here, the most it will ever roll over is what the balance cap is. So you'll typically have a surplus. And where you can manage that is down in your display. So just to highlight a few things here in managing your scenarios. If you have an amount over a period of time, then do it input. Display is where you'll do most of your modeling when it comes to ad hoc or one-off amounts. So if I go into display and individual, and I go to my super accumulation for my client, and what it allows you to do here is if you expand your start of period and scroll down, here is where you can request the lump sum cash out. So as you scroll across and you find their retirement date, when they've actually rolled over a pension, then whatever the surplus amount is over the balance cap, so it won't be at 49, it'll be at 65. So there's the retirement date. So if this was over the balance cap, then all you do in here is withdraw what the difference is. Hit the enter button, we'll refresh that screen so you can check the details are correct. So that's how you can manage the excess in the balance cap. As I said, as long as you know where to go, it's straightforward, but that's where you do it. So what I want to do now is move on to, we've covered all the efficient use, is just move on to some specific questions. And one is the property one. So what if we want to delay the rental income? So they might want to do some renovations, or it might be 2 months before they rent it out. So let's cover that question first. When I'll go and select my scenario for this. And again, I'm going to use the key dates to manage this. And this will highlight a few things that I have mentioned already about managing the scenarios. So here in my input and basic details is where I can go and add the key dates. So let's say I want to add a second date. And the second date will be, let's say it's 2 months later, where my investment rental income commences. So now when I go down to my property, as I saw before, you'll see in the property, so this is my Noosa unit. So I've got my description, I've got the purchase date. Under my growth, I still have that amount fixed. So I can't select a different time from my main input area. However, if I want to do ad hoc or one-off type adjustments, then I can do it in display. And now as I scroll down here, I now go to my display and find property. So in my display cash flows, you can see, first of all, in all the cash flows, I've now got my particular key dates specified here. Purchased investment property and investment rental income. So it helps me identify what those particular dates are for. Then when I scroll down, you can see I've got an area here for my rental income. Now, I do not want rental income commencing 1 January, which I would do in the input if it commenced immediately. So here I can nominate my adjustment on the rental income. Now, just understanding how it splits these. So this particular period is 1 March to 30 June. The next period is 1 July to 30 June the following year. So let's say they're going to rent it out for maybe $500 a week, or let's say $2,200 a month. So in here, I can put in what that will be for the remaining, what's that, 5 months, 4 months, 2,200. So let's say 8,800. What I can then do is go and put in what the rental will be then on an annual basis. But I don't want to have to put that in all the way through. And here's a subtle little thing to help you populate multiple fields. If you click on fill, that allows you to modify the sequence of inputs. So I can overwrite whatever is ever there. For maybe the next 37 inputs, we'll take him to age 67. And working out on the 2,200 a month will be, let's say, 26,400. But what I want to do is I want to then index that. I can put a dollar value, but typically you'd index it maybe by a CPI type value. So you can simply change that to percentage. And we might say here, we'll index that by, let's say, 2.5%. Now, I suggest if you're using percent, tick round to whole numbers, because of a percentage will add up to a lot of decimal places. So just tick that and go OK. And you can see that will automatically populate. So that's where you can use your key dates, and you can also use it to manage your delayed rental incomes. The next one I want to cover off is how to change the rate on CPI and age pension entitlements. The simple answer to this one is no, you can't, but I do want to highlight a few things to help understand it. You can adjust CPI on their own pension, and where you can manage CPI will depend on a capability. So I just want to cover this one off quickly. So the first thing is, if I want to change their age pension, so I might just go here and I'm just going to switch this back. Just wait till this refreshes. Here it comes here. So just going from their current position. Now, if I go and switch back to, if I go for my super contributions and rollover. So I'm going to cover two parts of this. One is they can change the indexation of their own pension. Now, this will totally depend on whether this error is still coming through. Something I've adjusted while I was playing with it. So if we go to input, let's check this, and we go to pensions, account, and NIC. I still have my error here, but this is where you can change. So this is your drawdown factor. What actually happens here, most of the time people will leave it as expend. So if you've got client and partner, it will proportionally take out what it needs to cover the retirement expenses. But when you change it to custom, firstly, if there was an error here, it will tell you what the minimums and maximums are. And this is where you can actually change your indexation. So I'm just going to minimize my menu. So this is where you can put in the income that I want will be maybe 75,000 a year. And this is where you can change the indexation. So CPI might be at the moment 2%. Say, no, what these clients want is indexed by 3%. Now, this might be several years out. So then you simply change, this will be the value in present value. So when they actually start drawing, it will be that amount indexed. So that's where you can change their pension drawdowns. Now, to change the CPI at all, and this is where you need to probably consider information. So firstly, you've got your economic. So if you wanted to change CPI on one thing, then effectively anything where it's got CPI will change it everywhere. So you've got to be careful with that. The other side of it too is, and this will totally depend on the licensee giving you capabilities, whether you have the ability to actually override the system assumptions that have been put in by the licensee. So you can see that put in 2%, you may or may not have the ability to override that. And we tend to find about 50% of licensees allow it and 50% don't. I'd probably be careful in doing so though. Okay, so that's the just covering off the CPI. The one in modeling a spouse contribution. This is very similar in what we've already covered, and I'll just cover this one quickly. So in looking at the CPI, sorry, not CPI, in the spouse contributions. So if you have a look in the input screen, firstly, for your super and accumulation, identify what's there. If you can do it in input, if it's amount, regularly over period, input is always best. So if I scroll down here, I can see I've got employer contributions, I've got salary sacrifice, I've got personal concessional. So it's non-concessional and they've asked for tax adjustment. Non-concessional, you can see here rates and fees, entry fees, and there's nothing here for spouse contributions. It doesn't mean you can't do it. You just can't do it from this screen. So to do that, again, your miscellaneous or ad hoc amounts, go to your display and look at the output where you can do those type of adjustments. So if I go to my display for the client, under super, accumulation, and client, and those of you who do a lot of the CALM modeling will know that there's a lot of information sitting in here within super, and it includes, you've got your transactions starter period. You can identify these where you can roll out the cash for anything over the balance cap. But if you go down to the next one here, which is contributions end of period, because it will be typically an accumulated amount, this is where you can add your spouse contributions. So if you don't find it input, go and have a look at displays and output. And this might be an ad hoc or one-off amount. You might just say, I'll put in 3,000 for that year. Again, you can use your fill if you are going to suggest a strategy that they do that over a period of time. So that's where you can find your spouse contributions. So hopefully in identifying some of these efficiencies and also some of these strategies and questions that we get, you can see different ways of managing it. The other one I'll cover off will be the last one, which is modelling. These last two are just requests on can I get more help, so to speak. But in modelling, LRBAs or limited recourse borrowing arrangements is an interesting one. I'm just going to go to that particular scenario where I've got it created. So first of all, there is a legal structure and then there is a cash flow structure. Now I could create the legal structure. So typically with your LRBAs, you've got a bare trust that actually owns the property. Then you'll find the borrowing arrangement is done within the super fund. So here I've added a bare trust and the self-managed super fund. If I have a look at the bare trust first, I'll do that in input and under capital. Two things is I cannot determine the LVR on an asset and a liability across two entities. I can only do it in the same entity. The other thing you'll also find is when I have a look at the trust, I can't have ownership of the trust as the self-managed super fund. So that's the limitations or restrictions, but there is a very easy workaround with that. And from a cash flow perspective, it works exactly the way it should. And to do that, you go to your self-managed super fund and you go and add the appropriate asset, being a property. So the difference is I'm just saying the self-managed super fund has the property as opposed to all the units in the property, which is the same type of value. I think I might have identified. I'm just going to adjust that. So if I go to my self-managed super fund and I add the property, and the way you can still help manage it is when you go to property, you basically just say that it's the bare trust property. So if I go and add property 1, and I'll say here, bare trust property. So that is just nominating the ownership, so to speak, and then just go and put in the rest of the detail on when it was purchased, dates, whatever it might be. And if I give it a value on the property, let's say and go done. So it's just adding the property in the self-managed super fund as opposed to the bare trust and the self-managed super fund owning all the units. So the value is the same. And then of course you go and add your liability. And it has to be principal and interest. And of course there are a lot of requirements around this. So here I'm just going to call this my LRBA. As simple as that. And I'll put in the principal amount, which can't be any more than 70%. So let's say that's the amount, and they fund the rest out of super somewhere else. You need to make sure you put in sufficient credit limit for it to be able to draw down. Now that I've added that liability, the key thing is where I can see in my outputs what the LVR is. So when I go to associate, you can see I can associate that loan with the property, which is the bare trust property. And that's where your linking is. Okay, so that's looking at our LRBAs and the workaround for that. Now, the other thing I wanted to cover off as well is we are aware that there are some contract planners may struggle with learning if they're starting out, but we do have the ability and we do allow contract paraplanners to join in and book into our standard monthly training. Even though you're not with a licensee, we do accept you as supporting licensees or users within licensees. And I'll just show you quickly where that is. So here you just go in iress.com, it will identify your locale because we do have different areas around the world. And to do that, you just go to support and select training. And then when you scroll down, you just select in Australia. And scrolling down, it will explain to you that at the moment they're all virtual classroom. There's no face-to-face. We will manage that or monitor it over time. Under your virtual classroom, you can nominate here what you may want to cover. Things like the risk researcher, X tools for individuals, X tools plus for entities, if you do model self-managed super funds. And what you'll find down the bottom of this same screen is where you can go and book in. Now, when you book in, if it says your Xplan URL, so you are not with a licensee, just put NA for not applicable, but make sure you put in the comments that you are a contract paraplanner supporting many Xplan users, and we'll be happy to let you into those particular sessions. Lastly, I just wanted to explain with the Iress community where there's a lot of information. So you will need to request registration. Now I'll just show you here is when you click on your user login, help via Iress community. So that's where we've got all the help menu. And of course, not just help, but it's a community. And a lot of people will post best practices. How do I do this? And ask for instructions. So when you then log into the community, now this is probably the easiest way to navigate. On your first landing screen, you've got Xplan. As I said, there's a lot of people look for best practice. But if you go and select training and scroll down, the best way to do it is filters, what we're covering today, X Tools Plus, in Australia, and view results. And this is where I wanted to highlight to you before. We have video recordings of all of our standard workshops, as well as a lot of other specialized ones, including what I mentioned before. So X Tools Plus enhancements, ones that came through at the end of the financial year, 30 June, and we ran a specific webinar and also manage the strategy in defined benefit. So all you do is simply click on that link. That will bring through and explain what it is, and you can click on that and you can see that particular webinar goes for an hour. So you can use this as self-paced or e-learning as well. Okay, so that's where you can request additional information. Now, the same as requesting booking in for training in the Iress.
Sorry, Andrew, I'm just really conscious of time. I apologise, but we've just got a bunch of questions. Could I jump to those?
Please, let's do so. Yes.
Yeah, we've just got a lot, and we're right up against time. You know, the property input that you demonstrated right at the start. We had a question around that the property acquisition details information options are different to the version that they have. Yes. So are there multiple versions? I mean, how does someone get an updated version?
That will totally depend on the licensee. It's a good question on managing it actually. So if you click on your username up here and you go about Xplan, that will tell you what version it's on.
Okay, so it just depends on the version. So what's the version? I'm just trying to answer Michelle's question here, which was...
I think that actually came through any version after about September.
Right.
We'll have those new screens. Any versions prior to that, as I said, that's all managed by the licensee. They determine if and when they want to upgrade versions.
Okay. Another question here is, do scenarios have to be locked to be able to compare scenarios?
No.
So you were...
Good question. Yeah, right. Good question. No, they don't. So when you have a look at your scenarios here, this is managing it from the scenario index.
Okay.
When I actually go in and do comparison, you can compare locked or unlocked. It doesn't matter.
And so if you lock the scenario after the financial year has clicked over or after the legislation has changed, does that still save the information originally used?
If you did it after 1 July and tax rates, for example, had changed and you click in it, it will update. If you don't click in it, then it's still saved everything that was previously touched, let's say. In that scenario, you could still lock it and save it.
Okay.
These are some good questions.
Over time, there'll be, you'll have many scenarios. Are you able to archive those scenarios?
No, there's no archiving. And this is a good point as well, is where you might say, well, okay, this particular client, I'm going to do about 5 different strategies and work out which one's best. What you can then do, I would suggest just leave their current position. That's how they were at that point in time, and your recommended strategy. And I would probably just delete the rest. Right. If you don't need it, don't keep it.
Okay. Is there a way, another question here, is there another way to view different accumulation funds in CALM? So for example, when this user imports multiple super funds, yep, Xplan consolidates them into one.
Correct.
So is there a way to view different accumulation funds in CALM?
No. It's a question we have had many times over the years. And the general idea is no. I'll just explain on how to manage that, because as I said, it is a really common question. Thank you. So when you go and have a look at the actual client and their super in the accumulation.
Yep.
So thinking of it realistically, they probably shouldn't have more than 3, although there may be some that do. But the general idea is you put the consolidated information here, and then you go down to your rates here, and you select a particular investment profile that's best reflective of the consolidated or the aggregated funds. There's no way of managing multiple. When we get that sort of request, we look at it from the point of view, well, okay, if you do another one, how many more do you want? The more you want, the harder it's going to be to manage. And all you're really doing is modeling a strategy from a cash flow perspective. You're not modeling product. If you want to model the product and consolidate multiple plans into a new plan, then you can do that through Wealth Solver. This is just purely from a cash flow perspective. So you might say, right, Mr. Client, your total super balances are 600,000, but you're unbalanced. You should be in something to reflect your risk profile of growth. Then all you do is simply change that to growth. And that's all you're doing is managing a higher return rate on their super capital or accumulation.
Right, perfect. Another question here, Andrew, which I hope you might be able to answer, is so the observation is, why is it when you import data, it adds the super and pension information to the asset screen?
To the
when you're adding super with the super and pension, it's saying that when you add that information, it adds it to the asset screen. They're asking, why does that happen?
So if I do an import, it won't add it to the financial assets here. If it's super, it will only add super to the actual super screen.
Okay, all right.
I think that answers the question. I'm just a little bit
Yep. I think it does as well. So there is a question probably around. This is a question around the time it takes for Xtools Plus to change screens. I think there's is that more to do with the user, or is that to do something deliberately around the system?
Oh, you mean like the refresh rate? Like if I click on?
Well, I think when you change screens, I think that's where the question is coming from.
A lot of that typically is your internet connection.
Yeah. Okay. Andrew, I'm very conscious of time, and we've got probably one more question that I can put to you.
Sure.
The question is around, are you able to show us how to do projections for affordability of insurance premiums as required now when preparing insurance advice for the effects on both cash flow and super? So are you able to do that projections through?
Yeah, at a sort of high level, if I understand the question correctly. So if I go to my input and I have a look at my super accumulation for the client.
Yes.
There is a specific area there where you do model the insurance. So when I scroll down here,
Yep.
where are we? Where's my insurance? Here we go, insurance premiums. So here I put in the insurance premiums there. And when you have a look at the output, that amount is then deducted from the accumulation balance on an ongoing basis. And the affordability side of it is, well, if it's within super, it comes out of super, so it will be affordable. The other way to do it, if you have ordinary cover, and this might be more what the question's about, if you go to income and expenditure, and here you can go and add an additional. So typically if it's ordinary cover, it will be post-tax. And then you can go and specify and then say insurance cover, put in an amount, and then go to your output, display cash flow consolidated, and see if it's affordable on the bottom line. So that's either within super or outside of super.
Thank you, Andrew. And I am conscious of time. We're right up against the clock here. Firstly, Andrew, I'd like to thank you and the team at Iress for putting this information together. You've taken us through a considerable amount of detail. I mean, I think you and I were talking earlier. You know, if you were to explain everything that happened in Xplan, it would just literally take not months but years. But thank you for, and I think frankly, taking us through CALM. You know, the property input and the updates to aged care and defined benefits, the efficient use, and ultimately where people can go to gain more information. So I'd like to thank you, Andrew, the team at Iress, for putting this together. As I said, we had around about 250 people registered. Thank
you very much for the opportunity.
No, it's our pleasure. I'd just like to remind the folks that are out there that we continue to have the AFA virtual conference available for the next, I think, around about another 2.5, nearly 3 months. So there's 40 hours of over 36 CPD points available. If you are interested, go to afaconference.com.au because there's plenty available there. Again, Andrew, thank you for your time, and to the team at Iress. And I look forward to seeing everybody very, very shortly. Thank you and good afternoon.
Thank you very much.